Back to Market on Close. I'm Caroline Woods. We have about 8 minutes left in the trading day. It's time for the big picture. Let's welcome in Nathan Peterson, Director of Derivatives Analysis at Schwab Center for Financial Research. Nate, good to see you. Want to get your thoughts on today's market action. What do you think is driving stocks today?
Hey, Caroline. Yeah, very impressive price action. That's for sure, especially given yesterday's gains. And it's understandable given, a number of things. I mean, of course, we know about the incremental improvement within trade, starting with the UK into China. It just seems like that tone, that rhetoric, if you listen to what President Trump, when he talks about Canada and, what's going on in Saudi Arabia with the investments there, that tone has really shifted and seems very encouraging. So, of course, the market, it seems like, sniffed that out in mid-April and started moving stocks up. We are up quite a bit off of those lows back on April 7th. And then you have a combination of the technicals. I mean, we gapped above our 200-day simple moving average on both the NASDAQ 100 and the S&P 500 yesterday. So that's incrementally bullish. If you're short and then you get this gap up above the 200 SMA, perhaps you were comfortable being short as long as the indices were below their 200 SMA. Well, then this is probably bringing on some short covering as well. And then likely adding to that is positioning that the positioning just wasn't, there was just a lot of pessimism that was out there. And so as the fundamental backdrop here appears to be improving, you're getting some of those fund managers that are essentially forced to take on more exposure to kind of chase performance. So certainly encouraging so far. Near term, are we overbought? Probably. The NASDAQ 100 has an RSI of 70. But Caroline, when you get these kind of momentum, this bullish momentum that can continue like this, just because you're at a 70 RSI or even a 75 RSI, that doesn't mean that you're going to, just reverse course and stop. You could continue to plow higher. And if you look at the likes of, NVIDIA, Aristonets, Astera Labs, Credo Technology, Palantir, new all-time high. All of these types of technicals, the tech trade is back. It's in vogue to be risk on again, apparently.
Yeah, but for how long, I think, is the question, because as you pointed out, this is just incremental progress. We haven't seen a ton of progress. It's just things, maybe the worst case scenario is off the table. So with an S&P 500 4% away from all-time highs, can you make the case that it could continue to reach those highs and move higher from there?
Well, yeah. Till how long? I would say give us some hard data that really misses. We've got retail sales on Thursday. If that were to come in as a big miss, or if we get some big shock on the employment side, initial jobless claims hasn't been bad. Non-farm payrolls hasn't been bad. Give us something, give the market a reason to be more cautious or to at least temper some of this bullish enthusiasm that we've seen. It could have been this morning's CPI, but it wasn't. We saw that the year over year, annual CPI, 2.3%, lowest since 2021. That even adds a little more fuel to the fire in the sense that the bulls can say, hey, now we've got the Fed who is ready to act in the event that we get a rollover in the hard data.
And Nate, speaking of CPI, are you surprised that the 10-year yield's actually ticking higher despite that cooler than expected CPI report? Not quite at 4.5%, but pretty close.
Yeah, it is a little bit surprising because you would think that, hey, cooler CPI, that should translate into, real yields. But B, if the Fed is going to cut, then why aren't yields coming down? The way that I translate it is that longer term growth prospects are going up. So it seems to me that the way that the market is assessing this whole trade dynamic that has been going on really over the past couple of months here is that there is a chance, and maybe that's increasing in probability, that the U.S. can negotiate these trade deals with the rest of the world, and perhaps it'll be a net positive for the U.S. balance sheet, and perhaps inflation won't be such a consequence of some of these tariffs that are coming into play. So at least for right now, Caroline, we could talk on Thursday or Friday and the sentiment could have already shifted. I understand we have to be nimble in this type of environment, but I think that's why yields are going up. I think the markets are saying this is a net positive for the economy and for growth in the longer term, therefore yields higher.
Nate, just want to quickly ask you about crypto, too. I'm not sure if there's a new crypto corner coming out to tune into, but Bitcoin, we've been waiting for its moment to shine. It's doing pretty well, only about 4.5% away from the all-time highs as well. But it's actually been ETH that's been shining this month, up about 40% year to date. Your thoughts on just kind of the action we've been seeing in the crypto space?
Yeah, technically it looks great. Ethereum is actually playing a little bit of the catch-up trade here. Ethereum has been, definitely outperforming Bitcoin here over the past, let's say, 2 weeks or so. But technically, I think it's great to see Bitcoin above that 100K level. Yeah, look at that chart on the Ethereum futures there. That's really, Ethereum was down 50% in 3 months if you go back to the month of April. And so it's really that, hey, if Bitcoin is coming back to life, getting above that 100K is significant. 105K, perhaps a little bit of near-term resistance here. But if we can get above that 109K, we're going to call it from the all-time high, that potential double top from December and January. It's probably going to bring in some more money off of the sidelines, at least from the technicians' standpoint. So very encouraging. Risk on, again, what we're seeing in the crypto world.
All right, we'll leave it there. Nathan Peterson, Director of Derivatives Analysis at Schwab Center for Financial Research. Thanks so much.